Fibonacci tools are some of the most popular technicals in use today. Now, you may be familiar with indicators such as Fibonacci spirals and Fibonacci extensions. Personally, Fibonacci retracements are my bread and butter. But have you heard of Fibonacci time zones? Fibonacci time zones are unique technical tools that allow us to look at the market in a fresh way. Now, in this video, we'll introduce you to this powerful technical tool and show you 2 ways to trade it. All right, let's get started.
Fibonacci time zones are vertical lines drawn on a price chart. They're located according to the Fibonacci sequence, a series of numbers in which each number is the sum of the preceding 2 numbers. Now, here's an example of a data set. Notice each number is the sum of the preceding 2 values. Now, here's what Fibonacci time zones look like on a pricing chart. Each time zone is a potential market reversal point. Okay, let's learn how to plot and interpret Fibonacci time zones. Okay, let's learn how to plot Fibonacci time zones on your price chart on TradingView and MT5. First, let's go to TradingView. You'll notice your tools section, your toolbar over here. Go ahead and give that arrow a click. You'll see the drop down right here. You get your Fibonacci time zones. Now, the key is to spot a range that is useful. Typically, this is a spike high and a spike low, but it really could be anything that you want it to be. It could be a macro range or a micro range. Let's go ahead and focus on this range right here, this spike high all the way down to this trough, that swing low, and you'll see exactly what happens. You get your lines plotted, and those are your Fibonacci time zones. Each time zone is a reversal point. So when in fact price hits these areas, we're looking for them to reverse, or looking for price to go ahead and change course. You can see that's exactly sort of what happened right here. Okay, let's go on to MT5. MT5 is a little bit more involved, a little bit different. First thing you're going to want to do is go up to Insert. You're going to go down to Objects. Now you're going to go down to Fibonacci time zones right there, and it's going to be the same basic methodology. You're going to look for a peak and a valley, or a spike high, a spike low, or a swing high or a swing low. They're all the same things. Let's go ahead, and we're going to go ahead and point there, and remember, you got to depress that button. Make sure you hold your mouse down, and then go ahead and release, and there's your time zone. So remember, time zones are a reversal type of an indicator. We're looking for price to change directions when they hit our time zones, and those are based on the Fibonacci numbers themselves. Okay, it's time to trade. Trading Fibonacci time zones is relatively straightforward. We have a simple 5-step process. The first step is to identify the trend. We're looking for a directional move in price. Second, determine the starting point. Now, that may be a swing high or a swing low, and that essentially is going to be related to your trend. Number 3, we're going to draw. We're just going to take our Fibonacci tool and apply it to the pricing chart. Number 4, if we're using confirmation, we're going to look to our other indicator to establish confirmation whether or not we should make a trade or be looking to make a trade. And number 5, we build the trade. We align our risk to reward, and we look to really balance our exposure to our potential profitability. Okay, this is the easiest way to trade Fibonacci time zones. We call it the conventional method, and we're looking to trade reversals. All right, let's show you what I mean. This is a good looking diagram right here, dollar-yen 30-minute chart. First thing you're going to do is you're going to identify your trending market or your directional move in price, and right there it is. I'm just going to work from a spike high to a spike low. That's the way that I like to do that, the most current spike high to spike low. That gives me a good idea of a viable range. Just remember, it needs to be obvious. You can do daily ranges, weekly ranges, monthly ranges, US session ranges, Asia session ranges, whatever you want. Just make sure that there's a move in price and that it's obvious and directional. Right here, we've got a nice little sell-off. So we're going to target that as our initial range. The other thing to remember is that when price gets to each one of our Fibonacci time zones, we are looking for it to change direction. So think of a zigzag. Just think of a zigzag in your mind, and that'll give you a good idea of what we're trying to do with reversals. You see we're looking for a pullback in that bullish price action here, bullish price action here. We're looking for a pullback, and then right up here, we're looking for another pullback. That's the diagram. All right, now let's go through a trade example using our TradingView replay functionality. A little bit tougher when the diagram's not already drawn, isn't it? The number one thing you need to do if you're going to trade Fibonacci time zones is learn how to identify a viable range and then draw your Fibonacci. So let's go ahead and do it. We're going to go over here on TradingView to our Fibonacci tools. We're going to go right there to time zones. There's my swing high right there, sort of the top of the market. And then right down there, there's my swing low. So remember, this is sort of your initial range. You don't necessarily want to trade based on that first time zone. You can. I highly recommend waiting for price to develop a little bit, the market to develop, and then maybe taking another trade that's of a little bit different direction after we have a little more evidence in. So right there, there's our initial bearish range. Let's go ahead and move forward in time right now. And you can see price doesn't do a whole heck of a lot. Actually doesn't do anything. So the question becomes, right now, do I want to go long or short? Well, my initial move was bearish. We haven't done anything. I want to go long. That would be my read right here. The reason why, initial move bearish, haven't done anything. We haven't gone lower. We haven't gone higher. Nothing's happened. I'm going to go ahead and go long the market. So let's go ahead and buy the market. I'm waiting for it to change direction. This would be a reversal strategy. And then where's my stop loss going to be? Somewhere beneath that swing low. So we've got a lot of different options. You could go fixed risk versus reward. You could try to go with your profit target up here in market structure. Get right in there. You could shoot for that. You could shoot for the top of the market. You could do a fixed 1-to-1, 1-to-2, 1-to-3. All right, you could do anything. Or you could do the simplest thing there is to do. We've got our long. We've got our stop loss location. We're going to get out at the next time zone no matter what. How about that? Let's go ahead and move forward in time and see how our trade works out. You'll see right here we've got some interesting 30-minute action. And then right there we hit our next price bar and we're in the money. So it wasn't the trade of the century, but right there, that would be how we execute this trade. Now, from here on in, what I would recommend is maybe not reversing the market here, but maybe, just maybe, wait for another big significant move to develop, something like this. Bang. There's our trade, long. Now we're out. Maybe we wait for another big move to set up either to the bull or to the bear and draw another set of Fibonacci's. So that's one way. That's the easiest way, conventional reversal method of trading Fibonacci time zones. Let's go ahead and add a little twist and see about trading this with confirmation. Okay, let's learn how to trade Fibonacci time zones with confirmation. We're going to use RSI, that momentum oscillator, to tell us when the market is overbought. When the RSI is overbought, it's over 70, all right? And then it's going to tell us when to buy the markets when we're oversold and we're beneath 30. So right here, you can see here's our diagram, dollar-yen 30-minute chart, our initial range, and then we've got a reversal right here. We're not going to trade it. Why? Because the RSI is not above 70. We've got another potential reversal to the short here. You'll notice that we're not over 70 again, but right here we break up over 70, so we're looking to short, and our time zone is going to help us time the market. As soon as price hits your next time zone, your Fibonacci time zone, you're going to go ahead and take that short. Why would you take it? Because the RSI is up over 70, and that's sort of your confirmation device there. Now, gold. Let's take a look at the gold chart. You see right here, 30-minute gold. We got replay functionality. This range right here is significant, and the reason why it's really the heart of that New York-London overlap. And if you're looking to trade gold or the U.S. majors, be aware of that period of time. We did a video on the best times to trade over at Forex Signals TV. Go over and check it out. We outline all the best times to trade. For me right here, though, relatively straightforward. There's your spike high, and there's your spike low, and that's your Fibonacci retracement sequence. Now, you'll notice our RSI has us in oversold territory. That shouldn't be a surprise. That's a nice big bearish break. Typically, the RSI is going to read oversold in that territory. So what do we want to do? Well, we want to buy the market. So our opening range, I would go ahead and wait for that next one, and we can go ahead and just roll forward in time, and then right there, okay, we are still in oversold territory. So what do we want to do? We hit our time zone. We're looking for the market to reverse against this initial bearish move. We have confirmation, and we're going to go ahead and let this thing roll. Now, we're going to go ahead and send them long. We're going to buy the market. Bang. There's your buy. Now, what do you want to do with your stop loss? A couple things you can do. You can always put it beneath that most recent swing low. I really don't have a problem with that. Maybe somewhere down in there. It's just extremely tight. So if you're buying something like that, maybe we're long from 27.91, and our stop loss is going to be somewhere around 22, something like that, 22.97. We can go ahead and let that go. Maybe it works, maybe it doesn't. This could be a 1-to-1, 1-to-2, 1-to-3, or we could just exit at the next Fibonacci level. Let's go ahead and roll forward in time and see what happens. Bang, we got stopped out right away. So no matter what strategy you're using, you're always going to have winners. You're always going to have losers. The key to your success is going to be building those strong risk versus reward trades and getting in when the getting's good. The Fibonacci time zones are designed to help you time the market. Number one thing you need to do is find a range that you can depend on. Number two, confirmation can be a great thing. It can help you really filter out the bad trades or the trades that are in less than ideal market conditions. And it can also help you really cut them off. You'll notice right here, hey, listen, if this market's not going to reverse, we could be in big, big trouble. So it got us out of that trade early. We don't just look at the winning trades. We look at the losing trades too. That's a good example of how to use confirmation with your time zones to get into the market and to cut off losers before they get any more serious than they need to be. All right, that's it. That's two ways to trade Fibonacci time zones, conventional and with confirmation.
The Fibonacci time zones are a unique way to look at price action. Most of the time, traders think in terms of horizontal support and resistance levels, candlestick patterns, or channels. Now, time zones offer a vertical look at price action within a reversal context. Now, we've only covered the tip of the iceberg. There's much more to Fibonacci time zones like multi-time frame analysis, clusters, and intersections. Now, if you want to see more videos on Fibonacci time zones, leave your request in the comments section below. We'd love to hear from you. All right, that's a wrap. Like, subscribe, and we'll catch you on the next one.